Okay, so if I told you a major economy had just logged a trade surplus, smashing through, what, $1 trillion in just 11 months?
You'd think it's a pretty big deal.
A huge deal. But here's the paradox we're really digging into today. How is China pulling this off when its trade with the US has, completely slumped? We're talking nearly 29%.
Right. That headline really confirms two powerful and almost contradictory things happening at once.
Exactly. You've got this collapse in the trans-Pacific trade that everyone's talking about.
Driven by protectionism, nearshoring, all of that. But at the same time, there's this massive surge in demand from totally new markets. It's a complete recalibration.
Okay, let's unpack this. Our mission today is to really understand this rewiring by looking at the maritime evidence, because the people moving the boxes are always the first to feel it.
They really are. And the data from the containers themselves paints the clearest picture. Visions data, which is, real-time container intelligence. It shows U.S.-bound bookings from China are down, and not by a little. We're talking a consistent 8 to 12% drop this year versus 2024.
That is a huge amount of volume to just lose on what was the world's biggest trade lane.
It is. But that's the key. The volume didn't just vanish.
So where did it go?
It performed this remarkable geographic pivot. And this isn't random. It feels like the payoff from decades of planning.
Like the Belt and Road Initiative investments finally kicking in?
Precisely. Look at these numbers for the new lanes. Africa-bound bookings are up, this is wild, between 20 and 25%.
Wow.
Europe is up 10 to 15%. And then you have the intra-Asian lanes, which are critical, up around 6 to 8%. It's Latin America, the Middle East, all these new partners.
So just to pause on that, we are watching a major economy basically compensate for losing its biggest customer by, activating a dozen others almost overnight?
It's an incredibly fast operational pivot, and it's confirmed by the freight experts, too. Peter Sandover at Zeneta has been watching this in real time. He said the carriers have been so agile in rejigging everything. It's like they rebuilt the entire global train timetable in 6 months. He put it like this.
Okay.
China has really been flexing its trade muscle in 2025, showing the results of what's been in the making for a decade, finding long-term options to its traditional yet past-peak consuming destination for manufactured exports, something that has been fast-forwarded by the U.S.-China trade war.
So we see it on the water, but does this micro view from the containers, does it actually line up with what the big global economic bodies are seeing?
It really does. If you connect this to the big UNCTAD report, global trade is still projected to hit a record, $35 trillion this year.
So trade isn't shrinking.
Not at all. It's just rerouting. It's being powered now by East Asia, by Africa, and crucially by what they call South-South flows. Those are up around 8%.
And just for clarity, South-South flows, that's trade purely between developing nations, right? It's bypassing the traditional U.S. and European hubs.
Exactly. It confirms that this geopolitical fragmentation, this friendshoring, it's accelerating, but the main effect is just displacement, diversification. It's not contraction.
Which brings us to another view. Neil Shearing, who wrote The Fractured Age, he argues this fracturing is going to be contained, not, across the board.
That's his base case, yes.
Okay.
He says it would be contained primarily to strategically important sectors. So think things like phones, batteries, chips.
The high-tech, sensitive stuff?
Right. Pharmaceuticals, dual-use goods like drones. But here's his key point. He says that even when production moves out of China, it often just shifts to another low-cost country, say Vietnam or Mexico.
Which is so important for the shipping picture, isn't it? Because moving a factory from Guangzhou to Vietnam to serve the U.S. shortens the route.
Sure.
But if that factory in Vietnam is now serving, say, Brazil, that entire journey might be much longer and more complex than the original one from China.
Exactly right. You could actually end up with more global shipping demand, not less, if these new routes are longer and tie up more vessels. It's a huge logistical reorientation.
So what does this all mean? The record surplus, it's showing us a dramatic, fast rewiring of global container trade. China navigated the collapse of its biggest market by activating this huge diversified portfolio of new customers.
It did. And this rapid acceleration of friendshoring, of building supply chains around political allies, it raises a really important final question for you to think about.
Go on.
If geopolitical loyalty is now dictating shipping routes, especially for those critical sectors we mentioned, the chips, the batteries, how much hidden vulnerability we're building into these new, longer, more complex global networks? That new mix of dependencies, that might just be the real risk to watch from this whole 2025 pivot.